everybody, welcome to a new video at the start of the week, Tuesday the 22nd of October, not exactly the start of the week. My name is Julius de Kempenaar and we're going to talk about RRGs, relative rotation graphs and relative strength in general. I am not going to address the state of the market in general because my opinion hasn't really changed over the last couple of weeks. And what I tried to express in last week's video is that it's probably better to take a look, concentrate on what's happening in the various industries and maybe some individual stocks. And this is exactly what I'm going to try and do in this video today. Let's get started. Let's start our journey with the RRG for the sectors. We've got the weekly RRG here up on the screen. Make it a little bit bigger for you. And what I'm going to do is just simply go over all the individual tails and make some sort of an assessment of my view here. And we can do that really quickly. So here's real estate. It's pretty good, but it's losing relative momentum. So I'm not really interested in building up new positions here. If you hold some, it's probably a good sector, but not for something new because it's losing relative strength, relative momentum. Same for utilities. Inside leading, but rapidly losing relative momentum. Financials. Kind of the same, although this one is starting to pick up more relative strength, which means that it's moving higher on the RS ratio scale. But still, the loss of relative momentum makes it very likely that there is a little bit more weakness ahead until this thing starts to really pick up relative strength, meaning a higher value on the RS ratio scale. Here is industrials. Went into the leading quadrant, but not at a very good heading. It's kind of stable, so it's an interesting sector, but probably not the best out there. Here's consumer discretionary, and that's an almost straight line moving into the leading quadrant at a positive heading, and a positive heading is a heading between 0 and 90 degrees, and that means that the sector, the tail in this case, is picking up on both scales. So it's rising both on the RS momentum scale as well as on the RS ratio scale, and that's the best that you can get. Here is technology on the left-hand side, picking up relative momentum, but not picking up relative strength. You can see the improvement in relative momentum, but it's not picking up on the horizontal scale, and that makes it a sector that is still under pressure from a relative perspective. Here is materials. This is a short tail compared to the others, which means that it's more static. It's on the left-hand side, it's improving, but there is no clear direction. The heading is kind of flat, making it a stable relative downtrend on the left side of the graph. Here's consumer staples. That's rapidly rotating out of favor. It's inside weakening and rapidly heading towards the lagging quadrant. So the strength that we've seen in this defensive sector seems to be taking a breather, taking a pause, and it's very likely that it will go into the lagging quadrant, making this an underperforming sector. Here's energy. That is still the weakest sector out there. It's very far to the left. You can see the jiggly pattern in the tail, which indicates uncertainty, but the most important takeaway from this tail is that it is the lowest reading on the RS ratio scale, making it not a very attractive sector at the moment. Here's healthcare, another defensive sector rapidly rotating into the lagging quadrant, clear underperformer right now, and more underperformance for this sector expected. And here is communication services, which is also pushing back into the lagging sector. So let me scroll that back. So now we're going forward, and you can see how communication services improve back and forth, back and forth. See what I mean with a short tail? Now we had a good week, and now we just jumped back over the last 2 weeks. So being very close to the benchmark, this is a sector where very likely not a lot of alpha generation stocks or industries are to be found. Now the next thing because this is the weekly stuff, I like to put them side by side to either get a confirmation or a negation of something that we see on those weekly tails. So I'm going to put them side by side on the same screen so we can actually monitor and compare the weekly and the daily tails together. So here are the weekly and the daily RRG side by side, and I have sorted them on symbols so we can easily go from the same sector to the same sector. So here is materials, as I said, remains weak on the daily. It's also inside the lagging quadrant. It's picking up relative momentum, but not a lot of relative strength. Not a super interesting sector at the moment. Here's communication services. Remember that weekly tail that went back, that rotated back? Here you see why. Here's the rotation of communication services into the lagging quadrant on the daily chart, and that's being picked up by that weekly tail here. So for the near term, not necessarily a strong sector, communication services. Here is energy with another confirmation of the weakness. Look at this length of this tail. This is a really long tail. It means that's a lot of power behind that move, indicating more weakness ahead for the energy sector. We had a very nice run, run through leading. But if you look at the weekly, that was only this last couple of weeks here, so not super meaningful. If we go to financials, you see the strength of financials in the daily, so that makes this weekly tail, as I said, it's still losing momentum, picking up a little bit on the RS ratio scale, and that's happening because of that move in the daily. So I'm going to qualify this as a decent sector. It's pretty good. It's probably not the best out there, but it's a decent sector. Definitely worth holding when you have a position. If you are looking for new positions, then I would probably wait until my weekly tail gets back into a positive heading. Here is industrials. That was losing some relative momentum, and you see why. So here it is on the daily tail, and you see how it rotated from leading into weakening, where it's now pretty stationary. This is a very short tail compared to the others, indicating a stable relative uptrend where we have a little bit loss of momentum, and that's exactly what was depicted here on that weekly tail. So a decent sector, not massively, but a decent sector. Here's technology picking up on the weekly, but look at the daily tail. So that pickup, you can see how it's bending back to the left, and that's because of that rotation on the daily, where you can see that it was a stint through leading and it started to lose relative momentum. It's now pushing into the weakening quadrant, heading towards lagging, and that's going to be, it'll be very difficult for that weekly tail to start moving into a positive heading with that daily dragging it to the other direction. Here's that weakness in staples, and you can see the opposite here. Here you can see how staples on a daily scale is starting to pick up again. With this move in the weekly, as close as it is to the crossing the 100 line on the RS ratio scale, I don't really see how, because we would need a lot more strength on that daily chart, because look at how low that reading is on the RS ratio scale. This is not going to be enough to drag the XLP tail back up before it hits the lagging quadrant. So if you combine those two, there's a very good chance that this XLP tail, that daily XLP tail, will roll over inside improving and join the weekly XLP tail on a negative heading, which indicates more weakness for the staples sector. Here is real estate, going through a setback here, and this is interesting because here you have the weekly tail on the right-hand side, highest reading, which is strong, but going through a big setback. And on the daily, it looks as if that setback has already terminated and we have started to move up, and it's now picking up a positive RRG heading. And that is very good because it offers the opportunity for that weekly XLR retail to actually, maybe it hits the weakening quadrant, but then turn back up and rotate back into the leading quadrant, that helped by that strength into that daily tail. Here is utilities. Same story as, or to a degree, same story as for staples. We are heading lower inside the leading quadrant, so it's still a strong sector. Well, it's not the same as staples. It's the same as real estate. It's losing relative strength, but look at the daily tail. It has already terminated its negative rotation. It's still inside the lagging quadrant, but it's starting to pick up. If that strength in rotation in the utility sector continues and it starts to move back into improving, maybe into leading, that gives the weekly tail of XLU enough room to actually maybe dip into weakening, but then curl back up and move back into the leading quadrant, keeping XLU on the right-hand side and being a relative outperformer. Here's the healthcare sector with that strong move into the lagging quadrant. And look at the daily tail. It's on the left-hand side, and it went through a bit of strength, but not nearly enough to make that weekly tail bend to the right. And this is a very clear situation where it is likely. You can see how it's already, the last 2 weeks has already stalled and now moves a little bit lower, where that daily tail rolls over, goes back into the lagging quadrant, joining the weekly tail of XLV into the lagging quadrant, making XLV an underperforming sector. It's interesting because we have XLP and XLV actually showing pretty negative rotations. These are defensive sectors, which would be a positive sign for the market. And then you've got utilities, which is the ultimate defensive sector, doing actually pretty well together with real estate, possibly rotating back into the leading quadrant. And that's all about what I talked about in my last videos, where we were discussing the confusing signals, the confusing rotations that we are seeing. Hence this video where we're going to look into industries and potentially some individual stocks. And we're going to do that in the last sector that I want to highlight here, and that's consumer discretionary. This is a very straight line. That's a very strong sign. It's a very strong move. Positive heading, picking up on both scales. Here you see how consumer discretionary rotated through a negative rotation, or went through a negative rotation. It's still inside the lagging quadrant, but it's picking up relative momentum. So as soon as we see this daily tail of XLY turn right and start to pick up strength on the horizontal scale as well, that will give it a positive RRG heading, and it'll be joining the weekly XLY tail in a positive heading, making it probably at the moment one of the more interesting sectors inside the US stock market. Now, my next step is to go and break down the consumer discretionary sector into its industries. That's a smaller subset of groups of stocks that are all together making up the consumer discretionary sector. And the way I do that is I'm going to use the sector summary page that we have on Stockcharts. So you go to sector summary, you will get a list of all the sectors with some data attached to it. And if you go to XLY, it's right here, consumer discretionary, and you go to the far right, there is a RRG icon on the right-hand side. If you click that, it'll bring up an RRG of all the industries inside the consumer discretionary sector. And this is now benchmarked against the S&P 500, which gives you a biased picture to the top right, which is to be expected because the sector itself is moving into that direction. So this is perfectly logical and to be expected. This is also what I call an open universe, because there is much more, because the benchmark is the S&P 500, and obviously these groups are not the entire S&P 500. Now, to get a better comparison, I'm going to duplicate this tab on my screen. So now I have exactly the same chart, and the second one I'm going to benchmark not against the S&P 500, but against XLY, which is the sector index. And now it is what I call a closed universe, because now all these groups together make up the consumer discretionary sector. And let me put that on the right-hand side for you, and this one on the left. So now we have identical RRGs. They're both weekly, but the left one is benchmarked against the S&P 500, and the right is benchmarked against the consumer discretionary index. Now you see there's one sector, and that's WCTIR. That's the tires index, tires group, and that's disconnected. So I'm going to tick that off on both of these charts, and then I'm going to fit them back, and we get a better handle of what's going on in these rotations. And at first you may think that they look very much alike, and they are, and as they should, but there are some subtle differences. So let's pick out a few. So here Against the S&P 500, you can see the USAT, which is the US Auto Parts Index, moving into the improving quadrant, actually on a positive heading. If you look at it against the sector benchmark, it's actually inside lagging and moving the opposite direction. You see a lot of what's green here is yellow here. So there are, you might be tricked into believing something, but if you look a little bit closer, you will see that there are some very clear differences in rotations. And that's going to help us because we already know that the consumer discretionary sector is one of the best or one of the better sectors at the moment. If we want to find the best of the best, we want to look at the groups benchmarked against the sector index and see what we find there. So I'm going to blow this back up because we've seen the difference. And now we are back into the groups, the industries, against the sector index. And let me make this a little bit bigger. Let's go over the individual tails and figure out if we find a particular group that we really like. Now here is recreational services. That I like because it rotated through, so from leading into weakening and then back up. And we know that that's a strong rotation. So this one is I'm gonna leave on the chart. Here we have home improvement index. There is so much good stuff here that I'm going to take this off. I only want the real good stuff. Here is restaurants and bars, clearly losing relative strength, relative momentum, so don't want that. I'm going to take off the index itself. So here is clothing and accessories. High relative momentum, good direction, might be an interesting sector. Here is the footwear. That's rolling over. I don't like that. This is the opposite of that recreational services index, which is going the right direction. And then we've got the footwear, which is rolling over. So we're going to take that off. Here is recreational products. Don't like it. Gambling, picking up relative strength and relative momentum, probably worth a closer look. Business, training and employment. There is better stuff in this sector. Here is travel and tourism. That's a good tail. It's a long tail, it's positive heading, and it's almost crossing over into the leading quadrant. Durable household. I might be tempted because it's not as strong. If you look at it, if you compare it with the travel and tourism, this is a really strong move. It's got a lot of momentum behind it. But the durable household is a little bit shorter, which means that the trend is a little bit more stable, and it's about to cross over into the leading quadrant, and it's maintaining its relative momentum. So this is a I don't know. You could look at the individual chart and make up your mind to see whether you like it or not. Here is hotels. That is very much on a positive. I'm going to take this one away because that is there. We have better. We're looking for the best, so this is definitely not the best. So here is hotels. That is a good group. Home construction, not so much. Rapidly losing relative momentum. Automobiles, not so much, losing momentum. Apparel retailers heading rapidly for the lagging quadrant. Don't want to do that. Furnishing. Yes, furnishing. Look at these long tails moving, rapidly losing relative momentum. Toys, one of them as well, moving into the lagging quadrant. Specialty retailers. What is happening here? All right, so this tried to improve and then it hooked to the left. Again, we're looking for the best, so this is going to go. We're not really liking that. Now we have auto parts, far to the left, not good. We got broadline retailers, inside lagging, still losing relative strength. There's better opportunities in this sector. And then here we have specialized consumer, and it has rotated back, so we're going to take that away as well. And that leaves us with 1, 2, 3, 4, 5 groups of potentially interesting industries that we may want to look at. Now, we can't do all of them in this particular program, but the fact that we've got one group that has rotated from leading into weakening and is now back into leading and picking up momentum again, I think that's worth a closer look at the individual stocks in that group. Let's start by looking at a price chart of the group itself using relative strength and the RRG lines versus XLY. So we're looking at the Recreational Services Index against the Consumer Discretionary Index. And what you can see is that this, from a relative perspective, this has been in a sideways pattern for since 2020, just after COVID. And it looks as if we're now getting above. There's maybe a little bit of resistance left here that's coming from those peaks in 2021. But if you look at the price chart, that is showing a very clear break. Above that, so let's say 122 level. And we're on the way. We even had a little test of that former resistance acting as support and then serving as a jumping board for this group to move higher. And let me make this a monthly chart real quick to see where we are. And we're running into, so around 150, between 150 and 160, there's a number of old peaks that will very likely bring in some sort of a resistance. But until then, the path is cleared for this group to move higher. And especially when you look at that long relative downtrend, the sideways move here, and now the attempt to move higher, which is already picked up by the RRG lines. By the way, you can see that this is a monthly chart, so a monthly bar chart, and the RRG lines picked up the new uptrend back in September 2023. If we bring this back to weekly, we get a little bit more granular, but you can see that the last pickup here was in January 2024, and it's been above. So we have seen some rotations on the right-hand side with the green RS momentum line briefly dipping below 100, but that's been good. So we had these rotations, leading, weakening, back into leading. And now we've got the break in price as well, supporting that relative strength. Enough reasons to explore this group a little bit further in terms of individual stocks. Now, how do I do that? I'm going to show you two ways how you can do that. And the first one is to, again, go back to that sector summary page, which is right here. And instead of doing the icon, the RRG icon, I'm going to click on the line itself, and that will give me the breakdown of all the groups in a summary. And now, when I click on the recreational services list, I can bring up the RRG again. So now I get an RRG with all the stocks in recreational services, which is part of the consumer discretionary sector. That's one way of doing it. And this pretty much covers all US stocks. Now, if you would like to concentrate on, let's say, large cap stocks, so you want them also to be in the S&P 500, so not just consumer discretionary recreational services, but also a member of the S&P 500, we need to go to the scan engine. So instead of going to the market summary or sector summary, I'm going to the advanced scan workbench. I'm going to take away the default, and I'm going to look for the recreational services group. I'm going to add it to my scan, so you will get this line. And if I now run the scan, I will get the 22 stocks, the same 22 stocks that I had on my RRG prior. Now, if I also want them to be in the S&P 500, I can add an additional requirement, and I can say, I want you to be a member of the S&P 500 as well. And now I get group is recreational services and group is S&P 500. And if I now run my scan, there's only 3 stocks left: CCL, NCLH, and RCL. I'm going to use these for my example here for this purpose, but obviously you can work your way through all the others if you're looking for more small cap or mid cap segment stocks. Just for the purpose of this video, I'm going to use those 3 stocks. I'm going to stick them into an RRG and look at the individual charts. So here's the RRG of those three stocks using SPY as the benchmark. Clearly three super strong tails, there's no doubt about it. If I bring it instead of SPY against consumer discretionary, I get a similar look, a little bit different. You see the hook here coming back up, but again, three very strong tails. And if I bring in the group, so I'm going to do these three stocks against the recreational services group, you will see a little bit more of a difference. So here RCL is inside weakening, just moving to the left, not the best, and you have NCLH and CCL as the ones that are pushing into the leading quadrant. Now I'm going to put the RRG on the left and bring up price charts on the right so we can evaluate them side by side. So here we have the RRG with NCLH, CCL and RCL. And on the right I have set up a price chart. So it's a weekly price chart with raw relative strength and the RRG lines. And the first one is RCL, so that's the one here inside the weakening quadrant. What you see that this is already show a super long run up, and to me there's always a danger of chasing this higher. Look at the recent rally. So I'm not a big fan of chasing these markets higher, especially not when you see that relative strength move, and you can see how the RRG lines have started to deteriorate a little bit. So the trend is still there. Again, if you hold RCL, there's no reason to sell it because it's in a very strong uptrend and it probably has some legs to run. Question is, do you want to entice new positions? Because the longer that move is in place, the higher the risk is that we're running towards the end. And the RRG lines are showing a little bit of weakness here. That's why it's inside the weakening quadrant. So I would pass on RCL actually. If I stick in CCL, that, to me at least, is a more interesting chart, because what I see here is that we're getting out of that base formation that lasted for at least 18 months, and if you take this into account, a lot longer. And we're now, the way has been freed to, it was only 1 week here, but the first level would be somewhere around 24, 23.5, 24. And then we're going to look at 27, and then here is the more important resistance level, just above 30, 31. But also the fact that the RRG lines are starting to pick up and the relative strength line is starting to bottom out, and there's a lot of upside potential here and not moving into uncharted territory. So the market's been there already, we know that, and we can move higher. The other one is NCLH. And if we stick that one in, and by the way, we're using the raw relative strength line versus the group, so that's against recreational services, and the RRG lines are also against recreational services, and you do that right here in these parameters. So here is NCLH. Again, a nice breakout. They're very much alike. CCL and NCLH are very much alike. This is maybe CCL had a little bit more of a sideways move. NCLH is coming out of a more downtrending move. But I think these are two potentially interesting stocks. So NCLH and CCL, I would actually prefer them over RCL because RCL has had such a long run. The risk of being overextended is increasing there, whereas NCLH and CCL are bottoming out and starting a new move higher. I'm going to wrap it up here. I hope you enjoyed the rundown of going from the sectors to the groups to the individual stocks in the groups and showing you how to get there. If you've got any questions, let me know in the comments below or send me an email. I'm happy to talk to you. And if not, I am looking forward to seeing you again next week, same time, same place.